Good evening. In a move that could reshape the entire landscape of artificial intelligence, Japanese investment giant SoftBank is reportedly in talks to invest up to $30 billion more into OpenAI. This staggering sum would form part of a funding round that could raise up to $100 billion for the ChatGPT maker, potentially valuing it at around $830 billion. For context, that valuation would place OpenAI among the world's most valuable companies, surpassing giants like Tesla and Meta. Tonight, we dive deep into what this colossal investment means for the future of AI, for global tech competition, and for the very nature of innovation itself. We'll examine the strategic gambit from SoftBank's visionary founder, Masayoshi, the immense pressure this puts on rivals like Google and Microsoft, and the profound questions it raises about the concentration of power in a technology that promises to redefine our world. This is a 12-minute deep dive into the biggest potential deal in tech history. Let's start with the numbers, because they are almost incomprehensible. According to a report first published by the Wall Street Journal and confirmed to Reuters by a source familiar with the matter, SoftBank Group Corp is discussing an investment of up to an additional $30 billion in OpenAI. This isn't a standalone check. This $30 billion would be a cornerstone of a broader funding round aiming to raise a total of $100 billion for OpenAI. If successful, this round would value the company at approximately $830 billion. To put that in perspective, OpenAI's last valuation in early 2025 was reported to be around $100 billion. This new figure represents an eightfold increase in just over a year. For SoftBank, this would be one of the single largest bets in its history, rivaling its infamous $40 billion Vision Fund. The source declined to be identified as the information had not been publicly disclosed. Both SoftBank and OpenAI have not officially commented on the report. To understand why SoftBank would make such an audacious move, we must look at the man behind the machine, Masayoshi. The SoftBank founder and CEO is known for his 300-year vision and his appetite for monumental, world-shaping bets. His track record is a roller coaster of legendary wins and spectacular losses. He famously invested $20 million in a young Chinese e-commerce company called Alibaba, a stake that grew to be worth tens of billions. Conversely, his $100 billion Vision Fund, launched in 2017, became synonymous with the tech bubble's excess, suffering massive losses on companies like WeWork and Uber. But Sun has consistently stated that artificial intelligence is the next frontier, the technology that will define the coming century. After a period of retrenchment and selling assets to shore up SoftBank's balance sheet, this potential $30 billion OpenAI investment signals that Sun is back, and he's going all in on what he sees as the ultimate winner in the AI race. He is not just betting on a company, he is betting on OpenAI's architecture, its talent, and its lead in generative AI becoming the foundational platform for everything that comes next. Now, let's examine what OpenAI gets out of this. $100 billion is an almost unfathomable war chest. What could a company possibly spend that on? The answer lies in the insatiable computational hunger of advanced AI. Training the next generation of models, like a hypothetical GPT-5 or GPT-6, requires staggering resources. We're talking about purchasing or building entire data centers filled with the most advanced NVIDIA or custom AI chips. The cost of the silicon alone is astronomical. Then there's the energy consumption. Running these models consumes power on the scale of small cities. This funding would allow OpenAI to massively scale its infrastructure, far beyond what its current partnership with Microsoft alone can provide. It would fund aggressive talent acquisition, pulling the best researchers from universities and competitors. It would enable massive investments in AI safety and alignment research, a critical concern as models grow more powerful. And it would provide the capital to fend off an increasingly crowded field of well-funded rivals, from Google's Gemini and DeepMind to Anthropic and a host of open-source initiatives. This money isn't for profit, it's for supremacy. This brings us to the competitive landscape. A $100 billion funding round at an $830 billion valuation sends shockwaves through Silicon Valley and beyond. Let's look at the current players. Microsoft, OpenAI's primary partner and investor, has already committed over $13 billion. How does it view a new, deep-pocketed partner like SoftBank muscling in? While Microsoft's Azure cloud is deeply integrated with OpenAI, a $30 billion check from SoftBank could shift the balance of power, giving OpenAI unprecedented financial independence. Then there's Google. Despite its vast resources and deep AI research history with DeepMind, Google has been perceived as playing catch-up in the generative AI space since ChatGPT's launch. An OpenAI armed with SoftBank's capital widens that gap significantly, putting immense pressure on Google's leadership to respond with even larger, riskier bets of their own. And what of other contenders? Companies like Anthropic, valued at over $30 billion, or Elon Musk's XAI, suddenly look like smaller players in a game where the ante has been raised to stratospheric levels. This deal, if it happens, could trigger a new global arms race in AI investment, with nation-states and corporations scrambling to avoid being left behind. But such concentration of capital and technological power in a single private entity raises profound ethical and geopolitical questions. Critics argue that funneling this much money into one company, controlled by a small board, accelerates the centralization of a technology that should be a public good. They worry about the black box nature of advanced AI, where decisions made by opaque algorithms could affect billions, with accountability resting in the hands of a few executives and investors. There are also major antitrust concerns. Would an OpenAI valued at $830 billion, backed by both Microsoft and SoftBank, constitute an unfair monopoly over the most important technology of our time? Regulators in the United States, the European Union, and China will be watching this deal with extreme scrutiny. Furthermore, the geopolitical dimension is inescapable. SoftBank is a Japanese conglomerate with global reach. A deep financial tie between a Japanese investor and the leading American AI firm could be viewed through the lens of the broader US-China tech rivalry, potentially complicating OpenAI's operations and access to global markets. Let's consider the potential roadblocks. A deal of this magnitude is never simple. First, there's due diligence. SoftBank will want to scrutinize OpenAI's governance, its roadmap, and its financials in minute detail. The unique structure of OpenAI, originally a nonprofit that created a capped profit subsidiary, adds layers of complexity. Then there's regulatory approval. Antitrust authorities, particularly in the US, may launch investigations that could delay or even block the investment. There's also the question of existing partners. Microsoft, which has seats on OpenAI's board, would need to be comfortable with this new dynamic. Could there be conflict between SoftBank's vision and Microsoft's strategic goals? Finally, the market itself poses a risk. The tech investment climate can shift rapidly. If there's a broader market downturn or a loss of confidence in the AI hype cycle, raising the full $100 billion could become challenging, even for a name like OpenAI. So what does this mean for the future if the deal goes through? We would be entering a new era of mega-cap AI. OpenAI would transition from a groundbreaking startup to a sovereign-like entity in the tech world, with resources rivaling small countries. Its research would accelerate, potentially bringing forward timelines for artificial general intelligence, or AGI, AI that can perform any intellectual task a human can. This acceleration has dual implications: breathtaking breakthroughs in medicine, science, and productivity on one hand, and significantly heightened risks around safety, job displacement, and misuse on the other. The structure of the tech industry would crystallize around a handful of AI superpowers. For startups, this creates a dilemma: try to compete directly with these titans, which is nearly impossible, or build applications on top of their platforms, making them dependent on the rules and pricing set by OpenAI. The deal also validates a specific model of AI development: closed, proprietary, and capital-intensive, potentially at the expense of more open, collaborative approaches. In conclusion, the reported talks between SoftBank and OpenAI represent more than just a financial transaction. They are a pivotal moment in the history of technology. A $30 billion investment, as part of a $100 billion round, is a bet that the AI revolution will be won not by a diverse ecosystem, but by a single, overwhelmingly powerful champion. It is a testament to Masayoshi-san's enduring belief in seismic shifts and to OpenAI's perceived insurmountable lead. For the rest of us, it forces an urgent conversation. How do we ensure that a technology shaped by such concentrated power aligns with broad human interests? How do we foster competition and innovation in the shadow of an $830 billion giant? And how do we prepare our economies and societies for the changes this level of AI investment will inevitably unleash? The answers to these questions may well define the next decade. The deal isn't done yet, but its mere contemplation has already changed the game. For Kenya News Update today, this has been a deep dive into the future of AI. Subscribe to Kenya News Update today for more in-depth analysis of the stories shaping our world.